Okay, Chair, we are live on YouTube.
Okay, thank you. I make it 5 o'clock, so we will begin. I'll just remove the notice about everything being recorded, and we make a start. I'd like to begin by welcoming those members of the public and press who are watching the live stream of this meeting via the Council's YouTube page. Due to the government guidance on social distancing, this meeting is being held remotely. A decision summary and minutes of the meeting will be produced in the usual way, and a recording of the meeting will be available to view on the Council's YouTube page. To enable the meeting to run in an orderly manner, I'd ask all members of the committee to keep their video cameras switched on for the duration of the meeting and to keep their microphone muted, except when I invite them to speak. Officers will join us to introduce their reports in the usual way. If you wish to speak, then please raise the virtual hand, which is blue and is located at the bottom of the participants section. Some people may have a newer version of Zoom, in which case the raised hand function has moved from the participants section to the reactions section and is now yellow. Whichever version you are using, please ensure you use the raised hand function to indicate that you wish to speak. As with all new arrangements, especially those involving new systems, there is always a risk that we may run into technical problems, and I would ask for your patience if we do. Should this occur, I will declare an adjournment while the fault is addressed and the public broadcast will be paused. If it's not possible to address the fault, the meeting may be abandoned until such time as it can be reconvened. I will begin by asking Dan Calley, Democratic Services Officer, to do a roll call of members of the committee if members can confirm their attendance.
Thank you, Chair. Yes, Councillor Coles.
I'm present, thank you, Dan.
Thank you. Councillor Jones.
Present, Dan, thank you.
Thank you. Councillor Joseph.
Yeah, present, thank you. Good evening.
Thank you. Councillor Shahid.
Present, Dan, thank you.
Thank you. Councillor Warren.
Present.
Thank you. And yourself, Chair.
Present.
Thank you. Just to let everyone know, we also have officers Pete Carpenter, Fiona McMillan, Kirsty Nutton, Steve Crabtree, and we also have representatives from Ernst & Young.
Thank you. On to item 1, apologies for absence. Are there any apologies for absence?
Thank you, Chair. Yes, we've received apologies from Councillor Fowler.
Okay, thank you. Item 2, declarations of interest. Does any member wish to declare any disclosable pecuniary interest or non-statutory disclosable interest? If so, please can they raise their virtual hand now?
I don't see any, Chair.
Thank you. Item 3, minutes of previous meeting. Members, we are asked to agree the minutes of the meeting held on the 16th of November 2020. Please can I ask for a proposer and seconder?
I'm happy to propose. Happy to second, Chair.
Thank you, Councillors Jones and Cole. Thank you. Okay, on to item 4 now. Audit of statement of accounts to those charged with governance. Please can I ask Kirsty Nutton and Ernst & Young member to introduce the report.
Thank you, Chairman, and good evening, Audit Committee. So this report is brought to Audit Committee as an update to the statement of accounts for 1920. As you'll remember, on the 16th of November, we brought a report to you with regards to the audit results report for the year ended the 31st of March 2020 from our auditors, EY. And in that report, it was expected that the deadline of the 30th of November would be met in order to finalise the statement of accounts. It was noted that there were some areas of work outstanding at this point in time, but there were no concerns with regards to resolution of these final audit points. However, following final review from Neil, he raised some additional questions and queries on one of the aspects of our balance sheet, which is the loan to Empower. And following that, we've got some further audit queries that need to be looked into as to whether further disclosure is required in our statement of accounts to reflect the activities that's happened since the 31st of March 2020, so post the balance sheet date. Linked to this report is an update from EY as well, and it was sent as a supplementary paper. So I was going to hand over at this point to Neil, who's better able to describe what the areas the auditors are looking at.
Okay, thanks, Kirsty. Welcome, Neil. Nice to see you again.
Hi, thank you, Councillor Over, and good afternoon, members of the committee. I think Kirsty's summarised the position that we were in at the committee in November. At that point in time, I explained that there were still some areas of our work to conclude, including review and professional practice consultation processes, of which I signposted some of those in the meeting associated with the work that we're doing on the council's disclosures on going concern and our value for money conclusion. To safeguard our professional standards and audit quality, there were matters, as Kirsty's rightly said, that arose from my review processes, and I'll come on to the Empower loan in a moment, but part of my update to this committee is to bring back to you the proposed audit report. So in the audit results report that you had in November, at that point in time, that was a very draft audit report, and it had some sections that did say that needed to be updated following our professional practice consultation processes on the council's going concern disclosure notes, but also the work we performed and the impact on our audit report. What you have in front of you at Appendix A sets out the proposed auditor report that comes out of our consultation process. And I thought I'd start at that point because you'll see within there it confirms back that we are corroborating a material uncertainty ongoing concern, which is looking at the continuity of service provision, looking at least 12 months from the date of the proposed date of the auditor report, but that's consistently reflects the council's detailed disclosure note in the financial statements. It also expresses an emphasis of matter associated with the valuation uncertainty on other land and buildings, reflecting the RICS qualification that's been positioned across the whole of the sector on the valuations of assets at the 31st of March. Now, in some councils, there isn't an emphasis of matter, but in others there are. I think given the nature of your funding position, we did think it was appropriate to draw an emphasis of matter in our audit report to that disclosure note associated with material uncertainty on valuations. The committee may also recall that we set out the work we'd performed associated with our value for money conclusion, which looks at the council's arrangements for securing economy, efficiency and effectiveness in its use of resources for financial year ended 31st of March 2020. The wording of our value for money conclusion sets out our concerns associated with the council's financial resilience. Now, I do want to make this clear that there's one section in our audit report that says that that in all significant respects, we're not satisfied that appropriate arrangements have been put in place. I do want to make that very clear. That's prescribed wording that we're asked to produce in our audit reports where we issue an adverse value for money conclusion. In the text above, which sets out the basis of the qualification, we make it clear that we believe the council's acted appropriately at all times to highlight the financial challenges it's facing. And I set those out quite clearly to Cabinet and to the Audit Committee last time in terms of the request for exceptional support, the basis on which the council was considering its options associated with Section 114, and the precarious position it finds itself in. But nonetheless, those are still significant areas of concern to the auditor, and therefore we are reflecting that in an adverse value for money conclusion. And in my cover letter, I'm making it clear that the reason for the adverse position is simply because the position you find yourself in is adverse and has a pervasive impact on your ability to deliver value for money in the use of resources. It's not to say the council hasn't acted appropriately to address the concerns when they've become aware of them. And I appreciate when you read the audit report, you could infer that conclusion when it says in all significant respects, but that is prescribed wording that we have to use for an adverse value for money conclusion. I thought it was appropriate to bring this back to the audit committee. You would have seen it had we been signed off at the end of November, in early December, but given the passage of time, I agreed with the officers it was appropriate to come back. So you did see that before we issued our opinion. Now, Kirsty's absolutely right. When I went through my review processes on some of the work that we performed, I had some questions, and possibly it's with the benefit of being new to Peterborough City Council and you're new as your external engagement lead this year. But I had some questions on the recoverability of the short-term debtor that's included in the accounts to Npower of 23.4 million. Now, my questions to initially to the audit team was, what work have we performed to assess the recoverability of that loan, and how have we tested that? Now, that loan's been running since the 2014-15 financial year. It was originally a construction loan associated with the construction, as noted in the cover report, of over 7,000 solar panel assets for residential properties. Now, over the passage of time, my scepticism, I suppose, as your auditor, was to say, is that still right to be classified as a short-term loan, given the position as at the 31st of March 2020? And the second question is, has there been any assessment as to whether that loan should be impaired if there's any risk for the council not receiving all of its money back? Now, having made some of those inquiries with my team and then subsequently with the finance team, it became clear that actually, since the balance sheet date, the council has renegotiated that finance facility and to put it onto a long-term loan facility with Npower. And that happened, I think, in October 2020. So that led to some further considerations for me in terms of the 1920 financial statements. The first is whether or not that event is a post-balance sheet event. I think it is. It's just a question as to whether that's an adjusting event or a non-adjusting event. And there's certain criteria under accounting standards to consider whether it is an adjusting event. I still have some questions about that I'm resolving with the finance team, but ultimately you need to look at the conditions that were in place at the balance sheet date and whether those conditions are still appropriate at the point at which this loan has been renegotiated. So that was the first question. And I suppose then my second question is, given that the loan has been renegotiated onto a long-term facility, does that change the question as to whether or not there should be an impairment assessment associated with the recoverability of that loan? And what I've been provided with pre-Christmas and in the period just before this, in the week before, so before this meeting, is several things. The first is the heads of terms for the loan. The second is the financial model supporting the loan, the relevant decision-making papers. I know the council has sought legal and corporate finance advice in renegotiating that loan and had, in the period pre and post-COVID, looked into a number of options associated with this finance facility and what the council could do by way of either selling the loan or renegotiating it onto a long-term facility, and have led to the position that they're in today. So I've had a lot of very useful information, and I've also had an assertion from Pete as the Director of Corporate Services and the Section 151 officer as to why the council is satisfied that this loan is recoverable based on the terms set out in the agreement. What work I've been doing is I've got corporate finance colleagues in EY who equally have expertise in financing arrangements of this nature, and in fact have similar experiencing associated with solar panels and financing associated with those in EY. And I have an individual in our team that's having a look over the detailed financial model this week, and will raise any final questions that we have on that financial model. Separate to that, I've got a member of our financial accounting team that's also looking over whether or not there is a basis for or a challenge from us as to whether there should be an impairment and assessment. Now, there are accounting standards that oversee things like this, and it's called IFRS 9, but essentially it's an expected credit loss, and whether or not there should be any recognition within the financial statements for the profile of the loan for an expected credit loss, and whether there should be an impairment adjustment in the accounts. So I think that is consistent with what I've said in our cover report. We're working as hard as we can on all sides to conclude this matter as soon as possible. The council at the last audit committee, I know, have agreed delegated arrangements for through the chair of the committee and for Pete in his role as Section 151 officer to approve publication of the accounts when we have concluded all the remaining items on our audit. But I think in consultation, particularly with Kirsty, we took the view that it was prudent to come back to this committee to bring you right up to date on where we are with the audit, and again to seek your view on what further information you'd want from all of us before the accounts are authorised for issue. You'll see in the report we've listed a small number of areas that we're concluding on, so on the rest of the audit, which is ongoing review processes and quality reviews. One thing we need to do before we conclude the audit is just bring the council's going concern disclosure right up to date of the audit, the proposed date of the audit report. I don't anticipate that's going to have any change to our conclusions. It's just going to bring the position up to date to reflect the outcome of the financial settlement and the cash flow forecast looking out probably to March 22. I think with that, Chair, I'll stop and invite any questions, but also look to the finance team as to whether or not there are any further comments as well on the points that I've raised.
Yes, I'd like to ask Kirsty and Pete if they've got any comments to make at this point before I open to question. Nothing?
Yeah, no, so I'll come in terms of this, and I'll let Kirsty go because she does more of this than me. I suppose in reality, I mean, Neil's come in new and reviewed something that maybe hasn't been reviewed for 2 or 3 years. And so it is the correct way to look at things. Obviously, we've been working significantly with external advisors through reports that lots of you have seen through Cabinet, and well, they eventually go to Council as well in terms of the Empower loan. And, you know, it's just something we have to get through and get right in terms of the accounts so that it's dealt with in the right way. Obviously, we went through a long process as per those Cabinet reports. We thought we had a seller in terms of a global tower solution just before COVID hit, and that all collapsed away. And so really the option we have here is to take on the portfolio itself, to put it in, keep it in a state where it can be sold in the future. I mean, that is still the aim, although it's a 15-year plan and we'll have all of our money back on the plan that we've got from Empower Limited. We will still look at options all the way through in terms of, is it, you know, does someone want it and sell it to be viable? Now, if that is the case, obviously it must be worth significant funds. But part of the issue was when we were just about to do the deal with Global Towers, everything else happened. So that we are where we are at the moment with this.
Okay, right. Have we any questions? Councillor Jones.
Given my naivety, but if somebody wanted to buy it, wouldn't they want to do it because they were likely to make money out of it? So on what basis would we sell it?
Councillor Jones, there's a number of factors actually. At the moment, what we have is 7,700 panels on social housing in Peterborough, Corby, Northampton, Boston, Sunderland, Stockport, Scunthorpe and Gravesham. All the homeowners receive free electricity generated by the panel. So basically, you know, if I've done a low pitch of 100 quid a house, people are getting the benefit of £1 million a year from free electricity from what this has happened. And this is a community interest company, and so it's fulfilling the requirement of that. What this contract does have, though, it's got feed-in tariffs that go for the next 15 years. It was part of the original tranche, and those feed-in tariffs aren't there for most of the later solar power projects, and so there is a net worth there. Also, the locations means that actually, although the technology is now a few years old, you can add to the technology, so link it to batteries. And another thing that will be of interest to people is link it to batteries, and what you've got over the next 5 years, by 2025, everyone has to have an electricity meter. You can then start trading it as well for spare capacity. So there is a worth to third parties because of all those things.
Okay.
Sorry, Chair. Just so, in other words, is by holding on to it, it may be a speculative. It may be that somebody would come in and say, actually, because now that even though the technology is older, and of course we've got to have the batteries, then somebody may wish to buy it and then we could sell at a profit. Is that the longer term aim on that basis?
Peter,
You're on mute, Pete.
you're on mute.
That's bad. At the moment, the business plan with Empower is that it washes its face anyway. However, there are ways, as the technology moves forward, that actually it might become quite beneficial for someone to take hold of for their business plan. So, for instance, one of the issues why Global Towers was interested in it wasn't the fact that it was solar panels. It was the fact that they had access to all that social housing, and Global Towers are also looking potentially about aids and adaptations and doing digital things for people in social housing. So there's all sorts of knock-on things that might affect one buyer or another. But because the portfolio is fully on social housing, that's one of the reasons why it's potentially of interest to people as well.
Okay, Councillor Joseph, please.
Thank you, Chair. So if this has a potential value, a net worth, and an ability to raise revenues, can we not take advantage of that and bring that money into Peterborough?
So the quick answer to that is we are at the moment stabilising it through COVID with the initial years, but Empower themselves have plans to start implementing these things over the next 4 or 5 years. And again, some of it is with government funding, because the government are funding the electricity meters, aren't they?
Mm.
We don't have any choice in the matter. We'll all have them by 2025.
Yeah.
And that then helps peer-to-peer with solar, especially in selling things onto the open market.
Okay, any more questions? I've got one or two, and they're probably going to be directed at Pete rather than to Neil, but this is a huge amount of money. And the first thing is that, is this going to drag us down, or are we going to get out of it at least with a clean sheet?
So the plan and the heads of terms and the loan agreement we have with Empower CIC is to the loan facilities to be repaid in 15, 16 years. And so on a yearly basis, they are repaying both capital and the interest elements. And obviously it's at a commercial interest rate, so we are making a slight return on it as well.
Yeah, okay. The second part of that is that I was quite surprised to find that we were involved with a company who were providing solar panels to a variety of places outside area. And I've never heard of that, or I can't remember. I'm just wondering whether that was a delegated decision, whether it was a decision made by the Cabinet Officer, or whether it went full council and I was asleep or I've forgotten all about it.
It was the decision was made back in, I think, 2014-15 in the original report. But it has been built on, and there are subsequent reports where it sets out where the panels will be taken, Councillor Over, or where they're located.
Well, I'll be very interested in the eventual report on this matter. I'm beginning to get the jitters over it, because we're dealing with long-term loans with commercial companies in areas way outside Peterborough, of which we have no relationship really at all. And we have a situation where we're dealing with social housing. And you say that some companies might be interested in getting digitally involved with them. And again, that induces caution in me. But I won't go on, but I'm just getting a little bit concerned about the whole thing, and I'll end it there. Councillor Coles.
Thank you, Chair. My question is really for Neil and Ernst & Young. Is I'm sure this isn't the only council where you've had to make these sort of comments and these sort of professional decisions that you've made. And I wonder just how much of an impact the pandemic has had in terms of the level of business you're carrying out with other customers? I mean, is this the sort of thing you've had to report to very many other councils?
So, well, there's two points I'd make on that, Councillor Coles. One will feel quite operational before I go back to the Empower loan, but operationally, about 50% of local government external audits were not signed. External auditors were not in a position of issuing audit opinions on the 2019-20 financial statements. So there is currently a pervasive issue across the sector at the moment around timely production of financial statements and conclusions of external audit, and there's a real sustainability challenge. Currently within EY, we've still got over 90 audit opinions to issue. That position is consistent in terms of 50% across the other audit suppliers. And it is fair to say COVID-19 has had a pervasive impact as well as when there were difficulties pre-COVID. I think COVID-19 has just exacerbated that. So in terms of the actual production of accounts and the position that Peterborough find themselves in at the moment around the delay to the conclusion of the audit, this is not an unusual set of circumstances. In terms of the specifics on the Empower loan, and within my portfolio of audits, I do have other organisations that have long-term loans, not necessarily for solar panels, but long-term loans to leisure providers, other operators, and I have exactly the same questions around the basis on which those loans are recoverable based on prevailing economic conditions and basically the understanding of how that loan is going to be repaid, whether there's security over the asset, what are the likely trends for that sector to recover and be able to repay those loans, and that's built into then a view as to whether there should be an impairment recognised. What I can say is that the information I've got from our specialists is that the market for things like solar panels is pretty resilient post COVID-19. So there are sectors such as leisure, hospitality, the aviation industry, for example, and you've probably seen lots of articles associated with local government bodies that have exposure to those investments where there's been a significant impact post COVID-19. So I wouldn't say my questions on Empower have really been driven by COVID-19, although it is a question I have for our specialists. I think my concern is more about what assumptions have gone into the heads of terms, the financial model. Are the assumptions too aggressive or not? What would the market be prepared to pay in terms of the security of the security that the council has over those assets? That's all forms of view about recoverability of that facility.
Thank you. And I guess we've all been encouraged to act in a more business-like manner and to take these sort of business risks. And I suppose you're seeing more of this as you look at other councils where they've had to take particular investment decisions, some of which have been better than others, to be fair.
Yeah.
Okay, I see no more hands. I don't think so.
No more hands.
Okay, right, thanks. Okay, thanks, Neil. I'll be interested to hear more about solar panels and EE over the course of the next few weeks and months, and see how we can get through this. And thanks a lot for all your input. I guess you're not staying with us, is that right? Or have you got something else to contribute?
I haven't got. I will stay on and listen.
Okay.
But no, I have nothing else to say at the moment. If the committee are content, I am content with the delegation that's still in place to get the accounts authorised at the point at which we all are finished. I think I said in my cover report that for completeness, I should just make sure, and I don't mind how this is done, circulate an update to the audit committee at the point at which the opinion's being issued, but probably with a update on the outcome of this outstanding issue on the Empower loan. But my view is that doesn't need convening another meeting to do that. I think there's a way of working with yourself, Chair, and Pete, in which we can do that and bring the whole audit committee up to date. But I'm content with the delegation from this point forward.
Okay, right. So thanks once again, and thanks, Kirsty, as well. And we'll move on. And if I can get this working. Yeah, here we go.
Okay, David, I think probably
Sorry, Peter.
David, I think probably we need to just agree the two recommendations, which is actually what Neil said.
Yeah,
we do need to formally agree there.
Yeah, I'm just trying to get
where we are, and
yes, I was just trying to scroll up. This is not exactly the most amenable of computers, but here are. So thanks, members. I'll go back to my script now. Therefore, I'd like to move the recommendations on page 11. These are: 1, note the 2019 external audit of the Council's statement of accounts, update from EY and the next steps. Secondly, following this update, to redelegate to the chairman to approve final charges to formally sign off the final statement of accounts following final EY audit actions. Members, if you are not in agreement, please can you raise your virtual hands now?
I see no hands, Chair.
Right, thanks, Dan. So, members, thank you. The recommendations are therefore agreed. Okay, right. So, item 5 now, internal audit plan. Please can I ask the Chief Internal Auditor to introduce the reports? Thanks, Steve.
Thank you, Chair. The report in front of you sets out our initial thoughts and proposals for the future audit plan 2021-22. What we provided in the report are overarching themes which are coming out from the risk registers, from ongoing discussions with the departmental management teams, discussions with county, because obviously there are a number of shared services, as well as trying to reflect on what's going on elsewhere with national issues. Obviously, we cannot cover all aspects of the council in any given year. It would be impossible, not down to resource, well, certainly would be down to resources, but there are so many areas of the business which the council delivers on. So what we've done, we've brought it all together into sort of key themes, and really it's open to members to raise areas which you're aware of, challenge where we're coming from with our thoughts as well. So the areas, we've got financial governance, which is one of the key areas. So that's looking at all the financial systems. Although we don't look at all the financial systems in one year, we'll select key elements of those and focusing on those. But obviously linking in with financial governance, there's obviously COVID is the biggest issue really going on really with the council at present. We're still maintaining business as usual, but COVID is covering so many things. And it is very, very obviously unlikely that April the 1st will stop spending on COVID. So we're going to be planning to put plenty of time into our audit plan to look at COVID. On information governance, obviously this is the IT side, data quality, cyber security. So with Serco contracts coming back in-house and links in with the county, we're going to have discussions how we can actually cover that across both authorities. In terms of corporate governance, we have risk management, and a regular report and update comes to your committee. There's also going to be business continuity. We've just issued a report briefly on that one. Fraud arrangements obviously go on across the council. We need to ensure that where we are spending money, it's been spent appropriately and people aren't helping themselves and having that. We've also got the National Fraud Initiative, which has come back on track. We've done the data load back in October, and it's imminent when we get all those data matches. So we'll be working on those to try and reduce fraud in benefit areas, the use of blue badges, and so on and so forth. The council's got a number of other service delivery areas, such as Aragon. The City College is now taking on aspects of Vivacity. And also there are sort of developments in place for housing revenue account and all the various bits associated with that. So with that business case and the plans for those, we're looking to take an active role in looking at those. Contracts and procurement, those are still ongoing. So we're proposing to look at some aspects such as Skanska. With the projects and programs which have been delivered at present, IT ones, there's a push for the replacement of Chromebooks. There's a push for mobiles to be replaced as well, because they're coming to the end of their useful life. So we're looking into those. And obviously climate change, there is an action plan. So that is something which we could pick up and run with. The people aspect of the business, there's obviously been a massive shift to agile working, and that's an area of activity we can look into. But again, linking in with that on the people side, mental health, if that's something we can audit, look at what's been put in place there to deliver on that. Obviously, on the service side, there's going to be business as usual. So there's going to be standard things looking at direct payments. And obviously grants, they're ongoing, We've had numerous grants in for COVID, so we can look at various aspects of those. How are those being sort of paid out? Is there a government appropriate arrangements in place for monitoring, etc.? That's really a whistle-stop tour of the various aspects of the business which we're hoping to look at. Obviously, as I already mentioned, there are finite resources available. So we will look to risk assess all of those, come up with appropriate scores, and that detailed plan will be brought before members at the next committee in March. Although we'll have that plan in March, it doesn't mean we'll stick to it. And that's on the basis the council's risks are going to be changing all the time. So there may be some things on there which will drop off and other things will take their place. Or things which we scored lowly will move up the agenda as well. I'm happy to take any questions about our initial thoughts for the audit plan and welcome any comments from you about areas which could be covered.
Okay.
Thank you.
Thanks, Steve. Councillor Coles.
Thank you, Chair and Steve. Thank you very much for your report. It's interesting to see the number of areas that you're considering. I just wondered whether you could give an impression on what you think is likely to be the vulnerability of the areas that you're likely to want to audit if we think that COVID might be continuing beyond, say, the middle of the year. I mean, are you already in a position to know those which are likely to fall off as a result of a continuance of the COVID pandemic?
That's a very good question. Well, if I base it on the current year's audit plan, from COVID wasn't at the time on our agenda when we started to build up the initial plans. So what we plan to look at and what we've delivered completely different. So that has actually skewed our work. We're looking to cover as many bases as we can, but the focus will be COVID. It's difficult to really answer on that one. We wanted to focus on much as business as usual as we can without diverting away from the COVID issues. Maintaining business as usual is paramount to the council to deliver to its residents. And we need to make sure that what's been delivered is in line with those, it meets the objectives, it's done as efficiently as possible. And if we identify any weaknesses, we can report on it and hopefully address it at the early stage.
Thank you. In terms of the resources that you currently have, are you operating suboptimally, or are all members of staff still available to carry out the work?
We lost one member of staff in the end of October. They got a promotion to another authority, and we have one member of our team who's been working in the Coronation Hub since May. So they're doing an absolute superb job working in there, but obviously it does reduce our resources. We are looking to get sort of additional help in to cover us in the short term. Then discussions will be had about taking it further forward.
Thank you very much.
Okay, thank you. Councillor Jones, please.
Thank you, Chair. Just going on from really as Councillor Coles was saying, is obviously things like business loans, areas that we couldn't have imagined a year ago, suddenly landed on our desk with people claiming loans, etc. How are you doing, do you think? I mean, obviously it's part of the audit process. And are any sort of elephant traps coming up that are likely to come around as this continues? Are more loans going out, checking for fraud? And also going on from there with the Serco thing coming on. Obviously we had the business with the mobile phones a couple of 3 years ago. Are the checks and balances, do you feel in place, or what checks and balances do you need to put into place to make sure that when everything is back from Serco as it should be now, we hit the ground running and you're going to, sleep easy in your beds?
Thank you. Taking the first point in relation to the grants, if you use the example of the business grants, which has been paid out in 3 separate stages now, there was a lot of work done pre-payment by transactional services, and obviously to collect the data about the various businesses, match that up, they've got various records so they could actually make those payments to bank accounts, etc. Once all those payments have been made, as part of the National Fraud Initiative, we can collate all that information of the records. So the name of the company, their bank account details, etc. And they've been submitted to the national body and can compare that then with companies' house records to show that they're still submitting accounts, they're still a live business, etc. So all our records were submitted there. So we get matches back, and we're in the process of ploughing through those to identify any businesses who shouldn't have had that money. Then there's obviously got to be the case of actually recovery. So we're not at recovery stages at the present moment in time, purely and simply because although there's, we're still ploughing through the records, we haven't identified anything untoward at the present moment in time. And I apologize, I forgot what your second point was about the business loans and that sort of thing.
I think just going on from that is, do you feel now that you're sailing into calmer waters? Because, you probably had to run to stand still in a very, very difficult time. And I set my hat off to, for the work that people have done in finance and, the audit team. So do you feel that things are under control and it's more management than firefighting? That's the end of the first.
Very, very good. I wouldn't say we are always firefighting because there's so many different things happening all the time. So it comes back to the question of my initial comment where I said we have a standard audit plan. It covers various areas, and we think we're covering all the business as usual issues. And something like this changes it all. So we refocus. It's maintaining the knowledge within the audit team as well, with all these different areas coming on board. We need to, having that knowledge, the detailed knowledge in some areas, so we can actually apply those to the audits and come up with appropriate arrangements and the conclusions. I wouldn't say we're out of the woods yet, certainly.
No, it's not a trick question, I promise you. The other one was just, if I may, Chair, was on the Serco contract coming back in, is auditing to make sure everything is where it should be and very little is where it is.
Certainly that is one of the things we are picking up on. There is obviously a board which monitors performance and delivery of those and what's come back in. There is appropriate asset records held for those. As I mentioned about the mobile phones, a number of mobile phones are at the end of their useful life, and that's why they're being replaced. So, we would look to ensure that all those phones are recovered, as an example.
Okay, thanks, Pete.
Yeah, thanks. I was just going to add to what Steve was saying, really, and just set out where we are. In overall terms, we have a gross turnover of about 400 million and a net turnover of 150 million. And of that, about 150 million is our two big grants, which are housing benefit and the DSG, which obviously have to be checked. This year, we've received over 120 million pounds worth of additional grant, which is roughly around 40 million Section 31 grant we'll get for those in retail, hospitality, leisure, and some nurseries for rebates. So not having to pay rates all year. We've got roughly 40 billion from Bs for payments to businesses. We had the 32 million pound scheme through the summer, and now we've got other schemes going on through the winter in terms of a closed business and everything else. Then we've had about 40 million pounds worth of direct and indirect grant funding to the council itself from five government departments to make sure that the council is funded for all the extra COVID pressures. So 120 million. Now, I suppose the interesting thing is that's 120 million. It's a roughly 40 different grants from 5 different government departments. I think one of the issues we're going to have at year end, now I will ask, actually Neil didn't know I was going to ask this, but as Neil's still on, is what Neil's view might be of what they will be asked for as external auditors at the end of the year, because some of those grants are really straightforward to do. Others, like Steve said, for business ones, for government, you know, we have to do all sorts of fraud checks. Some of the internal grants we have, for instance, the Contained Outbreak Management Fund, Test and Trace and others are quite complicated, go across multiple departments. And, you know, you have to have all sorts of evidence. So there's going to be an interesting set of problems at year end on what the government are going to ask our external auditors to validate to sign off grant claim forms, because there's now about another 40 because of this year, and we don't, and at the moment it's not clear how that's going to work.
Okay, thank you. I've got just one thing to say, Steve, is that I'm really interested in how a City College takes up their responsibilities and develops them over the course of the next financial year or so. I'm not totally convinced that putting together some of the responsibilities of Vivacity and the City College actually go together very well. So I will see with interest what happens.
Chairman,
That's coming. Sorry,
Pete.
Yeah, I'd just like Neil just to say what his views are from an external audit point of view of what they mean, because
yes. So as yet, I haven't seen any guidance that's come out yet from government departments as to whether there's going to be an expectation that external auditors issue some form of certification on the grant funding that's been received and whether that money has been spent in associated in accordance with the terms of the conditions of those grants. So I think that's one to just keep an eye on, and as and when there is any expectation on the role of external auditors, and I think there will be a conversation to be had, I think, about how that fits in with the ongoing performance of our audit this year, or whether there's other suppliers that are better able to, in terms of resourcing and capability, to pick some of that work up, or even whether it might even fit in with some of the remit of internal audit. So I think that's just one to stay close to around the individual grants. There is a question on financial reporting out of this, though, that clearly the council will be recognising a material income streams from government grants this year, and there will be relevant accounting standards that need to be applied around how those grants are recognised within the financial statements, and whether they're capital or revenue in nature, and the conditions associated with those grants, and the control environment for the processing of those grants, and also the relevant payments, and how they're recorded within the financial statements. So I think that's definitely within the scope of the external audit at a macro level when you look at the grants and how they've been recognised. But in terms of the individual grant claims, Pete, I think that's one where we haven't yet received any indications yet where the central government will be asking external auditors to do that work.
Okay, thanks, Steve. Were you about to say something then?
sorry, Jay, you mentioned about City College and looking into that. Yeah, we've already had the meeting with the City College to understand a bit more details of how it, what has actually been transferred to them, and getting their initial thoughts on how it's planning to operate. There is a program board, a project board set up which covers that. Yeah. So we'll keep it on a watchful eye on that at the present moment in time. Okay, thank you. And I see no more hands. So thanks a lot for that report. And we'll, I'd like to move the recommendations on page 15. These are: note and comment upon the emerging themes to be considered for inclusion in the 2021-2022 internal audit plan. Members, if you are not in agreement, please can you raise your virtual hand now? No, I see no hands. Members, thank you for the thank you. Members, thank you. The recommendations are therefore agreed. And we now go on to item 6. And I'll get up to it. Yeah, use of consultants, one of our favourite topics. So item 6, use of consultants. Please can I ask the Acting Corporate Director Resources to introduce the report.
Thank you, Chair. This is
hang on, Pete. Sorry to interrupt you. Why does it say Acting Corporate Director of Resources?
He is now the Corporate Director. Yes, that's right, Chair.
Right, okay. I didn't want
Well,
to demote you within about the first month of you getting the job. Right. Okay, go ahead, Pete.
Okay, in overall terms, Chair, this is a report that comes to every meeting, which was initiated back in 2012 when consultant expenditure was significantly higher than it is now. As we get through the first 9 months of this financial year, you'll see that consultant spend is only 1.2 million, so that projects forward at somewhere around the 2 million mark, so significantly less than in previous years. In addition to that, if we look at agency as well, first 9 months agency spend is only 2.4 million, so projecting forward to about 3.5-4 million for the full year. Again, significantly lower than previous years. So we seem to be bucking a trend amongst councils at the moment where people are very, very interested in our area of having full-time employment, because obviously you've got the pension, the other right protections. So things are moving in the right direction. We will always have the need for some agency and some consultancy because we don't have resource across the board that has expertise in everything. And also we, in terms of agency, we will need short-term support in certain places and in other places where people leave and we have to replace. And there'll always be timescales with that. But at the moment, these numbers are going really well in the right direction.
Okay. Members, if you have any questions, please can you raise your blue virtual hand and Dan will notify me of any members that wish to ask a question. I see Councillor Joseph. Councillor Joseph.
Thank you, Chair. Pete, it's good news to see obviously both of those figures coming down because they've raised huge concerns in the past, and obviously they are significant amounts of money. So well done on all the work that's been done to bring those down. My question is, do we expect that trend to continue? Obviously not necessarily down in as much, but to stabilise or at least not go above those levels going forward?
Thank you, Councillor Joseph. We would hope that we can try and control it at these levels. What will be the important factors is how we move out of COVID, because at the moment I think a significant factor for Peterborough has been people wanting permanent jobs, and the fact that, you know, the agency number in particular, how small that is compared to what it's been in previous years, is a reflection of that. And so, you know, it's going to depend how we move out of COVID and how people wish to work. I think something that might impact in the opposite, in both ways maybe, is something that Steve brought up in his report, Mr. Crabtree, in terms of working from home. We are working now in a completely different way in local government. We won't go back 100% to how we were working before. A lot of that is how people work and how people are now used to working remotely. And so it opens up avenues for people to work in places maybe that they never considered before. So it could be, as things start to level out, that we might find people looking at jobs, you know, quite significant distances away, because what we've seen now is distance doesn't matter. So that's on one side. On the other side, people might want stability over the next 2 to 3 years, which, you know, more permanency in terms of jobs. So again, that would be a positive factor.
Can I just give you a quote from one of my very famous business gurus, Mr. Steve Pipe, who says, "Hope is not a strategy, Pete."
I agree.
Right. No more hands I can see, but just a little bit of information. I have a friend who works at the West of England University, and she has spent the last 6 months working from home, which happens to be in Bangalore in southern India, without too much of a problem, except all her meetings are at a different time for what she's used to, because there's a 5-hour or 6-hour delay, but she can get over that. Okay. Thanks, members. There seem to be no more questions. Therefore, I'd like to move to the recommendations on page 23. These are that Audit Committee considered the update report on the use of consultants for the first 9 months of 2020-21. Members, if you're not in agreement, please can you raise your virtual hand now? No, I see no hands. Members, thank you. The recommendations are therefore agreed. On to item 7, use of RIPA. The members, there is nothing to report on this item at this meeting. Everybody happy?
Chairman, could I just come in momentarily and put my hand up? Sorry. I just wanted to let the committee know that we've just been informed that the council is going to have a remote inspection by the Investigatory Powers Commissioner's Office on the 25th of February on RIPA and our compliance with it. So we were last inspected in November 2018. So just wanted to update you on that so it was minuted.
Oh, okay, thank you. Right, any more comments? No. Right, we'll move on now. Item 8, debt write-offs over £10,000. Please can I ask the Corporate Director of Resources to introduce the report?
Well, thank you, Chairman. We try and bring the write-off report for debt twice a year so that we are totally up to date with things. One of the issues we've had in this financial year is the fact that none of the courts were working until September, October time. So, and that has impacted in terms of collection on various types of debt. Also, the fact within COVID, we've been trying as a council, if people have got debt with us, to come to arrangements to help them pay. These debts in this report have exhausted all of those avenues, and we are looking to write off £116,000, which has been provisioned for in terms of a number of debts across mostly adults and children's services. Again, these amounts are very small. In terms of council tax and collection fund debt, which you would normally see and would be much larger amounts, at the moment we are working through those because as part of the local government financial settlement, the government are going to reimburse 75% of non-collectible council tax and NDR amounts.
Right. Thanks, Pete. Councillor Joseph, is that your hand up? Yep, okay.
Yeah, thanks. I suppose my only question, Pete, is obviously 116,000 is not an insignificant amount in these days. What are we putting in place to perhaps ensure that we don't reach this level again? I understand how difficult it is to recover old debt, so I know where you're coming from. Obviously, the issue is to try and recover it earlier. Have we improved our debt collection rates going forward so that hopefully this number will be smaller going forward?
Yeah, thank you, Councillor Joseph. I think this is an area where even if you're really good, you can still improve. I would say we've been moving on that path. If I look at some of our bigger areas, we had significant amounts outstanding with the CCG at this time last year. That's about a third of that level this year. So those processes of working forward. I think with all debt collection, it's really important to raise the debt properly initially and quickly. And where we've written off debt in the past, it's where maybe we've looked at multi-agency things and maybe there's not always been agreement across those agencies and in terms of that. And so we've tried now to get everything in those sort of places agreed up front so that we don't have the write-offs in the future. There are always going to be issues in certain areas, but this is an area, as I said, even if you're really good, you can always improve. But it has been made more difficult over the last 7 months with what's been going on in the economic environment as well.
Yeah, obviously COVID is outside of COVID, I suppose. I should have caveated there.
Yeah.
Okay. Thank you. Right, if there are no more questions, I'd like to move to the recommendations on page 31. These are the Audit Committee note the uncollectible debts in excess of £10,000 report. Members, if you are not in agreement, please can you raise your virtual hand now? I see no hands. Members, thank you. The recommendations are therefore agreed. Item 9, feedback report. Please can I ask the Senior Democratic Services Officer to introduce the report. Dan?
Yes, thank you, Chair. Yes, this is just the report for members to note some of the feedback from previous meetings. As you see, there's 2 on there that are still ongoing as it stands at the moment, Chair.
Yeah, okay, thank you. Thank you, members. If you have any questions, please can you raise your blue virtual hand and Dan will notify me of any members who wish to ask a question. Nope. Thank you, members. There are no more questions. Therefore, I'd like to move to the recommendations on page 41. These are to note the report. Members, if you are not in agreement, please can you raise your virtual hand now? See no hands. Members, thank you. The recommendations are therefore agreed. Oh, I've gone past the item. Item 10, work programme. Please can I ask the Senior Democratic Services Officer to introduce the report. Dan, please.
Thank you, Chair. This is just the committee's standard item for the work programme. So you'll see the items that are coming to committee in March. And it's just an opportunity for members to add any additional items that they may wish to discuss, Chair.
Okay, thank you. I can't see any hands. Thank you, members. If you have any questions, please can you raise your blue virtual hand and Dan will notify me of any members that wish to ask a question. Pete, please.
My only comment on this is, although this looks at the March meeting and I have no problems with what's on there, I think the big issue the big thing we'll have to deal with in the March meeting is the forward plan for the whole next year.
Yeah.
And obviously there'll be things impacting that, and there might be things that move during the year which maybe haven't done in the past because of the impacts of COVID.
Oh, okay. Councillor Coles.
Thank you, Chair. Just bearing in mind Fiona's comments earlier, should we be considering the RIPA feedback to be moved forward should the report be in March?
Yeah, I can add that on, Chair.
Okay, thank you. Andy, have you got your hand up for a second question? No, okay, thank you. Where are we? Thank you, members. Sorry, I've gone past that, haven't I? Thank you, members. There are no more questions. Therefore, I'd like to move to the recommendations on page 45. These are to note and agree the work programme for the municipal year of 2020 and 21. Members, if you are not in agreement, please can you raise your virtual hand now? Nope, no hands. Members, thank you. The recommendations are therefore agreed. My scrolling facility is now stopped, so I imagine that's the end of the meeting because I've got a big yellow block here. Members, this now brings the meeting to a close. I'd like to thank members and officers in attendance for the contributions, and also to one member of the public who I think has been watching this meeting. So thanks all, and I hope you cope with the snow and the freezing conditions well. So good night, everybody, unless you're going to